Morning, Mr. K.
Yeah, good morning, Eric.
Today we talk about the investment returns, and this is something like the review. It's not necessary for an annual review. You can make a review, maybe for the periods from you started to do the investment until today. Yeah, and one thing I want to let you know is okay. If these conversations include some confidential information,
Okay.
then uh okay, I think I will still upload this video to the YouTube, but I will uh as a private video, so both of us still can access.
Mm.
But um, maybe at the end of the conversation we see if you or me have disclosed some confidential information and you don't want to let public know, yeah, then we just uh make it remain as the private video. Otherwise, well, we can public it. Okay. Yeah. So yeah, feel free to discuss anything. Mm, mm. Yeah. When the first question is when you start to do the investment.
Yep. And it is quite interesting because the time that I start investing is also February 2021. So
Oh.
it's around 1 year. I think it's
Mm,
like uh after 1 or 2 weeks is 1 year.
mm. Yeah. So you mainly invest in the stock market, right?
Yeah. All of my money invest in stock market. I only
Mm,
invest in stock market.
yeah. And all my money is in crypto. Yeah. And I started, I think I started in around May. I think it's April, May 2020. So it's around 1.86 years. Mm. Yeah. So, okay. And yeah, talk about my returns first and talk about my strategy. And I have, okay, for my investment, I actually split two parts. First is investing, and the second is the trading. So I separate them. And for investing part, I do DCA, which is called the dollar cost averaging.
Mm.
And if and yeah, dollar cost averaging to me so far it is the most profitable and sustainable strategy.
Mm.
And in the past, I tried many strategies, but none of them actually suitable for me. I would like to say like this
Yep.
because those strategy, some of them, okay, mm, okay, and you can buy low, but but when to sell, or how do you know when to buy?
Mm.
So other strategy will have some of the problem that's cannot be solved and require high level judgment. And I always make mistake if I need to make the judgment when to judge to time the market. Yeah, I always make mistake, and I always cannot make a very good prediction. Mm. So dollar cost averaging actually helped me solve a lot of problem. When to
Mm.
buy, yeah, every month, and when to sell. This not today. This not tomorrow. This not three months later. This not one years later. Is maybe 5 years later or 10 years later, or after I achieve my goal, financial independence, and maybe I don't sell at that time. I still don't sell. I still maybe withdraw a very small portion of money.
Mm.
Mm. And talk about the returns. Mm. Okay, if you as of today and for this 1.6 years, my profit is around 140%. So this is a profit. So this means every $1 become $2.4. Yeah, 1.4. Yeah. I mean 140% profit, and you can also say it is like 2.4 fold of your initial capital. Yeah. So $1 become 2.4, and your profit is 1.4. Yeah, and plus your initial capital once equal to 2.4. And yeah, this is at the current price. And I only use Bitcoin to do a tracking, because nowadays I only invest in crypto, and I only invest in Bitcoin and Ethereum, and their price action is quite similar. Especially for these recent months, Ethereum is kind of like become very stable, and the price action is very similar to the Bitcoin. Yeah, but maybe it's just because we haven't experienced a severe bear market. In a severe bear market, I would presume Bitcoin is a hard asset, is a hardest crypto asset, and every other asset will just fall relative to Bitcoin.
Yeah.
And if I calculate at the all-time high, so at all-time high, I'm using the Bitcoin price 69,000, and if I try to use that price to see how much I profit, is around 290%. So it's around like 300%. So you can see the difference quite a lot. Yeah, for current price of Bitcoin is around 42,000. So 42,000 increase another 50%, and then my returns will almost double. Yeah.
Yeah.
And this is the investment returns is excluding the trading. Yeah. So how about you? Yeah, I think maybe we talk about the returns first, and then later we can talk about some lessons and some thoughts, some reflections, and maybe some mistake you have made, or something you want to remind yourself.
Yep. Yeah. So for me, yeah, actually, for this year, I used the platform of eToro to make my investment. So yeah, I can trace back the money that I invest, and then the profit, the loss, how much, and yeah, according to the information from the apps, I actually suffer a loss of 18.63%.
You mean overall started from you do the investment?
Yeah.
Yeah, and actually, yeah, go ahead. Sorry.
And yeah, I actually stopped invest more money into it a few months ago, when I saw I actually suffer loss, and then loss actually is not the main reason. The main reason is that when the price of the stock comes down, and I actually don't know whether I am investing correctly, because I didn't do much research. I just follow like my intuition to invest. I didn't really like look into the financial ratio or some financial reports of the stock, and then I didn't like compare the stock and then something like that. So it makes me like um, I don't want just to put money for something that I don't know. Yeah, it is like gamble. And also the past few months, the price of the stock market, many of the stock actually falling.
Mm.
Yep. So yeah, I think this is for this topic. It is it make me feel bad, but I know that it actually has a good impact for me to start like really um, do the preparation for every investment instead of like just put money and then to play. Yes, it is not playing.
What kind of strategy you are using? Is it dollar conservation or like the buy and hold strategy?
Actually, I didn't sell much. I buy quite a lot, but yeah, I think my the amount that I invest is not fixed. Yeah, so it is not dollar cost averaging. But it seems like I sometimes see when it drops quite a lot, then I increase a
And
little.
and you buy and then it drop more and you buy the dip, buy the bit.
Yeah, yeah.
In crypto there is a story. Sorry, no, sorry, not a story, it's a meme. It's a meme. And they always say buy the dip, buy the dip, buy the dip. And some people wonder how can they have unlimited money, always buy the dip, but the price keep dropping. Yeah, yeah, go ahead.
Mm. So actually, I think yeah, this is really not good. And also, I previously I also plan to like invest a fixed amount of money every month. But I think before I can do that, I really need to like uh know what I invest and then do enough research for the stock that I want to invest so that when the price goes up or goes down a lot, I still can continue uh with my plan, still invest the same amount of money instead of like increase or sell or what. Yep.
Yeah, and it comes to one of the point um, that I think is the most important, and what I have learned and what I have convinced myself in these years in investment in my investment journey. But later I will specifically talk about it. And okay, and for investment, I assume you are picking the stock by your own, right?
Yeah.
So what is your portfolio? Is it a lot? How many stock in your portfolio?
In my portfolio, it is there are five.
Yeah. Then what are those five?
Yeah, number one is Xiaomi. Yeah, Xiaomi
Okay.
Vision.
How
And
about the performance?
performance is negative 31%.
Wow, 31%. Okay, I see.
Suddenly it dropped a lot until right now it's like $16.
What? Oh, okay, yeah. And what is the next one?
But the next one is the 3D System Corporation, DDD. Yeah,
DVD?
uh, the
Is it
DD,
doing 3D? What?
yeah, 3D.
Oh, is it related to 3D printing?
Yeah, 3D
Mm,
printing. Yep, for this one, the performance is like negative 18%.
mm. So is is the average right? I mean, near to your overall
Mm.
performance.
Yeah,
Mm.
actually,
Okay.
this is the second largest portion in my portfolio. The largest is Xiaomi. Yeah.
Mm. Yeah.
And the next largest is GCN Power.
What
This
does do? Mm.
China stock. It do
What?
nuclear energy.
China stock?
They are uh yeah, this I think they how to say the stock market is in Hong Kong.
Okay. Oh, yeah, I see.
Yeah.
Mm. So what is the performance?
The performance is 38%. profit. Yeah, this one is
Mm.
making profit.
Yeah.
It do the nuclear energy.
Yeah. Nuclear, uranium. I think this is a trend. This is a good trend, especially I think one of reason, yeah, this stock is performing so well is because nowadays people move their money to value stock, and Xiaomi and also like the 3D printing is a growth stock. They move money to value stock, and especially they move money in the energy sectors. And nuclear is one of the most, I would like to say, most promising technology nowadays. Yeah, to generate the emission in energy sectors. Because if you see like the solar, if you see that the wind, this is actually, how to say, not stable, or actually not reliable. Yeah, reliable is a correct term. But nuclear is very reliable.
Mm.
Of course, I don't know what is the financial performance, and what is the financial position and financial performance of this company. I just using my my limited knowledge to guess. So what's the next one?
The next one is, let me see. The next one is Alibaba.
Oh.
Yeah, for this one, I actually wanted to buy the dip. Yeah, and when it dropped a lot, and I buy, and right now it dropped further 30%. So the
mm,
the loss here is 30%.
yeah, I think this is my judgment, and this is my I don't want to give any advice to you, but in my opinion, Alibaba is better than Xiaomi. But I don't.
Industry
but
or what?
what?
Do you mean the industry, or like other performance?
I mean in the industry, and
Oh,
also in the potential, and also in terms of the market space. I always talk about the market space, right? Market space is something like the maximum market size, or the maximum market you can hit, which is the ceiling of the industry, ceiling of a company in an industry. And if you look about Xiaomi, and I think escape Apple. Yeah, of course, I also will not invest in Apple. I mean, if you look about the hardware, mobile, or maybe a computer, including computer, Apple is the best bet, and no other bet is better than Apple. This is my judgment. Why? Because Apple has built a huge network effect around its ecosystem, and the Apple is a leader, is a leader who are in the, I would say it's the top. I mean, this is the most the leader who are standing in the front the most, compared to other mobile phones, compared to other uh computers hardware company. And Apple really know how to do one thing and do really well, and she know what's the right correction. I say what's the right direction. Yeah, for example, the chip. We actually have have a kind of like the chip shortage, right? And maybe Apple already foresee this, started from a few years ago. So he planned to build his own chips, don't rely on others chips company. And now Apple has the best chip compared to others chip company. It's called the Snapdragon or Nvidia, and also Intel. Yeah, compared to them, Apple has the best chip. So you can see Apple is not only a mobile or computer hardware company, it's also a chip company. It's a chip hardware company. And not only that, Apple has a software, and the software is so amazing. People cannot leave the ecosystem. And people who buy the Apple product is not just because of the hardware, it's also because of the software. They can shift from one hardware to another software seamlessly. This is a contribution. This is the software. Software make it become possible. And in Apple, in his ecosystem, it has the right incentive to attract a lot of developer comes in to do the innovation, do the innovation, create new apps, contribute to the ecosystem. If you look about the Android and Android for phones, Windows or Linux for computer, for laptops.
Yeah.
But for Apple, once you create an app, it can be software. It can it can be for laptop use. It can be for computer use. It can be for mobile use. You just need to do some adjustment on the GUI, which is the interface, the user interface, and then you don't need to change your code. So for developer, it is so friendly, and so this is the network effect. Yeah, the network effect comes from the user. The network effect comes from the developer. The network effect comes from the supplier, maybe. Yeah. So Apple really know how to integrate everything into one, and make 1 + 1 more than 2. But look at some other company, they're just doing something and focus on one thing, and the market become more competitive. And also Apple is not just a hardware software company, it's also a company that provide the most security, provide the highest data privacy to its user. So people like it. But Apple is also a data company. By maintaining the user data privacy, Apple still can kind of like achieve a balance point that's make the user feel good. At the same time, it can use the data of the user to make its product become better. Yep. Okay, but I don't invest in Apple, and I will never invest in Apple in the foreseeable future.
Yep.
So I think Apple is better than Xiaomi. And if you want to say Alibaba, I will also say it's better than Xiaomi in terms of industry. And also, in Chinese it's called the 赛道. Yeah. In English it's called the race. This is just at a better race. Yeah, and just now you mentioned one thing, which is because you pick the stock by your own. And why don't I think I mentioned this a lot of time. When you do the investment, and you can use a DCA, and if you want to be comfortable, if you don't want to spend a lot of time, a lot of energy in investing, you can just invest in an index, right? For example, SP 500 or Nasdaq.
Yeah.
Yeah, I did mention before. Yeah, and look at look to the SP 500. Since May 2020, it ups until now it's a 50% returns. So if you invest $1, it will become $1.5. And if I compare to the top, which is around 4,800, the index price, and it is 60%. The return is 60%. And I don't even need to look at the Nasdaq, even though Nasdaq dropped a lot in this recent months. But I don't even need to look at it. I can know that the Nasdaq is a best performing index. I mean, the big index. If you don't include some other small index like the Russell or some maybe some other emerging markets index, because what I want to say is the performance may not be sustainable. Yeah, of course, we can also say the SP 500 and QQQ, Nasdaq. These 2 years performance is so great. This is not going to sustain. You are not going to have maybe like 25% returns every year. So if I look at the Nasdaq, started from around May, is around 220, and compared to nowadays is 347, like it made to 350. 350 minus 220, so 130 divided by 220 is around 60%. Compared to 59%. If I pick the highest price, it's around 400. 400 minus 220. 180 divided by 220. Wow, this is 81.82%. Around 82%. This is amazing if you just invest in the index. And the cost, the difference is not just you are losing the 81% or losing sorry, it's not just losing the 59% or losing the SP 500 50% compared to the price as of today. It's a percentage, it's a gain and loss between your portfolio and the potential gain you are able to get. So for your case, you lose 30%, and if you invest in SP 500, it's 80% difference. Yeah, but of course, if you do the dollar cost averaging, the gaps will become lesser because yeah, sorry, I think I think I'm using a wrong starting point, because you start to do investment in February 21, right? Yeah, so I think I'm using the wrong starting point. And for QQQ, the April 2021 is around 238, and compare now today's price around 347. 347. So this is just about 6 to 7% gain. And if I look at the SP 500, if I look at the April, April is around 3,900, and now is around 4,426. So it's around 10 plus percent. Yeah, 12 or maybe like 15%. And if I look at Bitcoin, I think this is also not very good. If you started from maybe February, if you started investing in February, the price is almost the same. Yeah. Yeah. But I think the point I want to make is not just look at the single year or 2 years. What I want to say is, maybe you invest in the passive index, the market, the returns is better. Yeah, and also you suffer less risk. Yeah, it's not just about return, it's also about the risk. The company you are invest in can go bankrupt anytime soon. If there's a systemic drop in the market, if let's say the index drops 60%, 70%, or 80%, and your company cannot finance, maybe your company still suffering a loss, and it cannot finance itself, and it will just go bankrupt. And yeah, so in the bull market, investor willing to put money into this growth company, and this company are able to raise money to finance his losses, to raise more capital, invest in the technology, invest in the business. So the bubble can blow bigger and bigger until it started to make profits. Just like Amazon, just like Tesla, just like Jingdong, yeah, just like Alibaba. Every modern technology company, they need to blow the bubble big enough to gain enough economic skill before they can start to make money. Yeah, and I would like to talk about the trading. And for me, the return just now I mentioned just now is excluding trading. And yeah, and one of the things I learned in this year, sorry, not this year, in the recent 12 months, is trading is a must to increase yield, which means increase the percentage, the returns in terms of percentage, the yield. When the markets go sideways or the markets go down. And also the second reason is it allows you to shift the focus when the market is tanking, which means the market is dropping. So when the market is dropping, and try to imagine you only do investment.
Yep.
Okay, this is for me. It's not suitable. It may not suitable for other people, but for me, it's highly suitable. I'm only do DCA, and I'm seeing my profit. Yeah, just now I mentioned from if at the top, it's around profit 290. From 90 drop to maybe 100% profit, or until today is around 140%. So yeah, it's 100+% profit.
Yeah.
And this is not the major drop I experienced. The major drop I experienced is in around the May, June, July 2021. And you are seeing your portfolio cut half like this. And the profit you make, the paper green, become very, very little. Yeah. But at this time, if you have trading, you can shift your focus. You just don't see about the investment, even though it dropped like half, it dropped like 50%. And you can shift your focus on the trading. Yeah. And your trading, you can trade as you wish. Yeah, no matter you are losing, no matter you are making money. And if you lose a lot of money compared to your investment, you see, oh, so lucky I make investment. I don't put all my money in trading. And if your trading generates some yield, or maybe the losses is lesser than investment, you think, okay, this is good enough. Yeah, if I put everything in my investment, and then I will suffer more losses. Yeah, of course, it's kind of like cheat yourself. But in order to achieve a long-term success, sometimes you really need to kind of like cheat yourself, shift your focus. And a good trading strategy and okay, I mean, a good trading strategy is essential. Yeah, it's very important, of course. So otherwise, you just kind of like gambling, and you really need to deeply understand your trading strategy. So a good trading strategy and a deep understanding of your trading strategy are essential. Is what I want to say. And follow your own intuition to make trading or make investments will just make you suffer, not only from the financial losses and also the mental cost. In this case, it's kind of like, try to imagine you make a lot, you make some money, you do some saving, and everyone you save some money, and then you allocate part of your money, maybe half of your money into investment, but your investment keep losing money. So it seems like you are throwing half of your saving into the sea, and no sound you can hear. At least you throw your coin, you convert all your paper money into a coin, and you throw to the sea, they will have some sound. But you throw into the financial market, the losses, don't have any sound. And and the second thing is continue to learn. Learning is very, 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 very important if you want to do active trading, if you want to do active investment. And what do I mean continue to learn? What do I mean continue to learn? What I want to achieve from the learning is understanding. Understanding is the most important thing, and this is also the thing I just now I say. This is one of the most important lessons I learned. And okay, you can even take out the one of the. This is the most important lesson I learned in this recent 12 months. And also, in my opinion, understanding is the most important thing. No one of the most, but the most important thing in investment, also in trading. And understanding increase your time horizon, lower your time preference, so you can think longer terms. For example, you are doing dollar cost averaging, and the worst, the most terrible thing is you feel happy when the market is up, and then you put in more money. But when the price is dropping, you're scared. You put less money, or you put no money, or you sell. So it violates the purpose of doing the dollar cost averaging. Even though a very promising strategy can turn your performance from green to red, if you not understanding what you're doing, if you don't understand the strategy, if you don't understand what you're investing. Now, so understanding really means you know what you're doing, and when you suffer some losses, you're okay. Yeah. So for me, what is a good understanding? A good understanding is when the market go down 50%, or go down 60%, go down 70%, even go down 80%. And okay, you may not know why it go up, why it go down, but you know what you're going to do. You know what you're going to do. Maybe buy, maybe hold. Yeah. And when the market goes down 50% or 60 or 70% and nothing changed, Nothing changed. The fundamental of the company, no changes. And you dare not to top up. You dare not to buy the dip. Either is your understanding level is poor. You don't have enough understanding. Or the ticker is just not a good investment. Yeah, and in some circumstances, it's also using another perspective to describe the understanding. The ticker is not a good investment, and you believe this is a good investment. This is a good ticker, so you invest. So it also seems like your understanding level is not high. You fail to recognize some of the weakness, some of the risk, some of the risks of these tickers, of this investment. But if you know what you're doing, for example, the crypto markets go down around 55% to 60% in the mid-year 2021, and who is going to sell? The long-term holder is not going to sell because you know the fundamental haven't changed, and the fundamental just become better. Why? Because less centralization, less concentration, less power concentration in China, and the mining facility and also the hash rate distributes around the world and become more decentralized. So in this case, why do you sell? The fundamental become better and the price become lower. People want to buy, long-term holder want to buy. Of course, we don't know what's the lower price we can see. Nobody can predict the lowest price, but you know this is a very good opportunity. Yeah, but still, for me, I still need a trading. Because the emotion can really trick you, even though how you just cannot be absolute rational all the time, and you just don't want to give yourself any single point of failure. Maybe you are very tired today and you see the market drop another 10% and you just come back from home and this is a terrible day. Your boss give you some negative feeling, extremely bad feeling, and then you think, oh wow, every month I just earn like maybe 4,000 ringgit. Yeah, and I put almost all my saving into this investment, but just another 10% drop, I lose one month salary. I lose 2 or 3 months salary. What's the point of making this investment? Why don't I withdraw? Why don't I sell to the fiat currency, and when it drop further, I invest back? Yeah, you just don't want to give yourself a single point of failure. So for me, trading is still a must. And yeah, and go back to the understanding. And another advice and also another thing I learned from Ro Paul, if I pronounce his name correctly, and this advice is come from another investor, which is called Paul Tudor Jones. Yeah, if I pronounce correctly. Yeah, if you type the Paul Tudor, P-U-D-O-R, Paul, P-A-U-L, is one of the greatest greatest trader and investor in the human history. And what he says is match your investment horizons to your time horizon. So your investment horizons, for example, crypto, for example, stock market, this is like 5 years, 10 years, or 20 years. And if you commit yourself to invest in this market, you need to match your time horizon. You need to change yourself because you cannot change the market. The market is still functioning. And you cannot say, oh, I want to make profit tomorrow. I want to make profit next year. I want the market make me profit in the recent 1 year. I don't want to wait 5 years. I don't want to wait 10 years. I don't want to wait 20 years. This is something you cannot control.
Yeah.
What you can control is you control your own time horizon. You just think longer, or maybe you think shorter. If your time horizon is 100 years, this is too long for stock markets. So yeah, match your investment horizon to your time horizon is very, very important. And yeah, trading must be short terms and diversified. And you need to set a stop loss point. Stop loss point or cut loss point must be set. No matter what. Yeah, no matter what conditions. If the price drops to your cut loss point, you have to cut. You have to sell no matter what. This is the law. This is the first principle. This is the first principle of trading. If you found that you keep losing money from cut loss point, then that means your trading strategy is not good enough. You need to improve your trading strategy. What you do is improve your trading strategy. What you shouldn't do is adjust your stop loss point. Now, of course, different trading strategy have different type of stop loss points, and yeah, so this is there's a lot of things to learn here and a lot of things to explore here. No one's strategy fits all, and also the amount you do in trading cannot be material, which means it must be a small portion compared to your investment. Maybe 5% of your total investment portfolio, maybe 10%. Yeah. And investment must be long-term and fundamental based. No stop loss point should be put on. Why you should put a stop loss point on your investment? You shouldn't do that. What should you do is understand really, really well. If something not worth to buy, you just don't buy. If you make a wrong decision and you buy a ticket, just sell. If you buy a ticket and if you and the price is drop a lot, this is time to buy. It's not time to sell. Yeah. So yeah, investment must be long-term and fundamental based. No stop loss points must be put on, and amount must be material. If the amount is not material, you just cannot earn enough money. You just cannot earn earn enough, like accumulate enough capital, or like a double or like triple or even any kind of returns, which means increase your value of assets. And if you want to be rich, you must buy assets. Either you create an asset, either you create a business, you do a startup, and then you own the equity, or you buy the assets. It could be real estate, it could be stock, it could be bonds, it could be anything. You can't just use your time to work to become rich, to work to become wealthy. You just can't do that. And when the market rally, which means when the market go up, And sometimes you have a feeling that you want to top up, and you always think that, and you think the market will just go up, always go up, and you want to FOMO, and you want to spend off your cash. You don't want to lose the opportunity. The FOMO means fear of missing out, but this is bad. Shouldn't do that. And you always need to think that you will always have chances to buy at a lower price, even though it may not be true, even though the market just keep ready, and the price as of today, you never seen in futures. There's a possibility here. They also have maybe a relatively high probability here for some markets, but you always still need to think that you will always have the chance to buy at a lower price. Why? Because it restricts you to spend out all your cash. You need to keep some powder. You need to keep some gunpowder. You need to keep some cash. When the market drops, you still can put in money. Yeah. And you need to think that there are much more opportunities than you think. Even though you miss this trend, you can still invest in your cash in other markets. Yeah. So when the market up, if you miss a trend to buy low, but you still can earn some pocket money from trading. So this is one of the reasons I say trading is a must for me. I can use the cash at my sideline to do trading when the market is ready. And because I have set the stop loss point, my losses will be limited. Yeah. So I will not miss the whole opportunity, the whole market rally. Yeah, the whole bull market. Yeah. And if let's say the market drop a lot and you have some money, and normally in this case trading is not a good option, because when market drop a lot, trading is just not a good thing to do, because you can't really make a lot of money from shorting the market. This is it can be mathematically proven. And so at this time, either the market goes sideways, either the market drop a lot, and most of the time your cash sit on your balance sheet. And then when the price drop enough low and you think it's a good time to buy, you can top up your investment. Yeah. And when market up again, you can allocate, you can rebalancing your cash, your cash and your investments percentage portfolio, or maybe you just leave it because your buying point is so low, and you don't even need to bother that. And because you still keep earning some income, so you still will have some cash to do trading, or you still have some cash to spare for the next bear market. But if you all in, let's say when the market rally and you FOMO, you put in all your money and you left no cash, you have no trading. And when the market drop 50, 60%, yeah, maybe you fully understand what you're doing, and you understand the ticker, you know it is temporarily, you know there's no changes in the fundamental, then you need to stomach the volatility. You just need to wait. Yeah, wait is rise back. Yeah, of course, there's risk that the ticker will go zero. The ticker will just go sideways. In the next 100 years. But this is related to your understanding. Yeah, and yeah, so when the market go down, you need to take risks. and also ensure your risk will be well managed in every situation. What do I mean when market goes down? Take risk, which is buy the dip. Yeah, and you need to ensure your risk will be well management in every situation, and nothing will make you withdraw money out of the market and force you sell your investment. For example, you shouldn't borrow money to do investment. Of course, if you really have a high belief, if you really have a high conviction level, maybe you can try to do that, but you need to really manage your risk. Let's say if you lose your job, and then how are you going to pay the debt? How are you going to pay back the loans? You need to run the simulation. You need to run every situation, every possibility. Yeah, sometimes take some loan to do investment will just make you better off. And it's also taking risk. You're taking more risk. Yeah. Try to imagine. Yeah, of course. For example, let's say when the market drop 50%, 60%, why you don't buy? Why don't you buy? And you also can say, if the ticker, if the investment is so good, why don't you borrow money to buy? Yeah, if the investment is so promising, why don't you borrow as much money as you can to buy? Yeah, the reason is you shouldn't you shouldn't over leverage yourself and make you have exposed to the risk of losing all of your investments. Yeah, which make you withdraw all the money out of the market or force you sell your investment. For example, now you need some money. Maybe you lose your job, and then you need some money. You didn't keep some emergency funds, and the market is dropped a lot, and now you want to buy the food. You don't have money to buy the food. You have to sell some of the investment to buy the food, to pay rental, all of these things. So don't let you have the chances to withdraw the money out of the market. Because when you do that, you just basically mismatch the investment horizon to your time horizon. You are forced to sell. You are forced to liquidate yourself. You cannot match your time horizon to the investment horizon. Yeah. And also, next point, how low is low? Yeah, how low is low? When is a price you can buy the dip? Quite subjective. It's really quite subjective, and this is based on your understanding. Of course, your understanding is in this particular area is very subjective, highly subjective. But one thing you can do and you must do is you need to prepare for yourself. You need to plan. You need to have a plan, investment plan, and also a trading plan before the market starts dropping. When the market rally, or even when you start doing the investment, you must have a plan already. What if I buy in this ticker when the market drop 50%? What should I do? Yeah. And once you have conceptualized a price range, would you think this is a reasonable price range that you can buy the dip? Don't simply change it, especially when the market drop near to the level, maybe slightly above it or slightly below it. Don't change it. Don't change the price. Don't change the price range. Why? Because we have a lot of buyers, and the reason you want to change it. For example, the market dropped too quickly, and drop below your price drop below your price range, and you think, oh yeah, it dropped below my price range. Oh shit, what should I do? Should I buy or should I wait? Because it dropped so drastically.
Yep.
And what if it drops slightly higher than your price range? You think, oh, it's in me already. What if I buy? What if the lowest point is at this point? Yeah, the reason you want to change is because of your emotion, your fear of missing out, which is when the price is slightly above it, fear of missing out, and also fear of losing money. When the price is slightly below your price range, you're afraid of invest into the market and then the price keep dropping. But it's already low enough because you have conceptualized the price, this low price range, reasonable and low enough price range for you to make money with the least amount of risk in the long term. You already figure out, you already conceptualize it. Why should you wait? Why should you wait a deeper dip? So construct a plan, prepare in advance. When price reach your target, or when the price target reach, execute the plan. No matter what. No matter how much unwillingness you have, no matter how much struggling you have. And yeah, you may buy a higher price. And this is related to the understanding. You can always improve yourself. You can always improve your subjectivity. And next time, you are able to conceptualize a better, a lesser risk adjusted returns price range. Yeah. Just to admit that you just couldn't make it right in this time, no matter what. If you're triggered by your emotion to make the decision, you just worse off. Your rational, your understanding level just not enough for you to capture a bigger returns. You still need to keep learning. There's no ending. And next time, maybe you are able to capture a bigger returns, a bigger risk-adjusted returns. Yeah, of course, it still involves luck. And also, some other thing I want to add in, which is my lesson: do not invest in small cap altcoin. Yeah, this is for me. And just let you know, I invest in one altcoin, and my investment is around 1,000 USD, and the price I buy in is around $6. Okay, $6. You know what is the current price?
One.
Yeah. $1 is highly overstated the amount. Okay, the current price is 0.0433.
Wow.
Yeah, $6 becomes 0.0433. So it's around. So you can see like the 1,000 become less than $10. Yeah, $1,000 become less than $10. Of course, it's a bad investment. And now I fully understand. In the past, I understand why I shouldn't invest in small cap altcoin, but now I fully understand it. Yeah. So do not invest in small cap altcoin, no matter what, no matter how good you think they are. Of course, the trading is different case. Trading based on trading rules. Yeah, because trading you can set the stop loss point, so you can limit your losses. And in crypto, in my opinion, you can only trade altcoin to get a better risk-adjusted returns, trading returns. if you want to trade the big ticker, the like Ethereum or the Bitcoin, why don't you just do investment? No point to do trading on those ticker. So this is one of lesson I learned in this year. And yeah, this concept can also apply on the stock market. Don't invest in small cap stock. Yeah. And talk about my trading returns. In last year, around September, October, I actually have a very good opportunity to do some arbitrage. And by doing the arbitrage, I earned quite a lot of trading profits. But in the foreseeable future, I cannot do the same arbitrage again. So it's just kind of like one of trading profit is not sustainable. And it generated me around $7,000. And yeah, and another trading strategy, which is a trading bot I'm using, generate me around 20% of the returns. And I put in around 5,000. And at the peak, it seems like make me like 1,800 to 1,700, but it dropped some. So because I didn't really calculate it, and I think it should be around maybe 1,300. The net profit from the trading is around 1,300 or 1,200 to 1,300. Just make the safe a safe figure, let's say 1,000, it still have a 20%. Yeah. And yeah, and also the next trading which I make is the altcoin. This altcoin lose me around 1,000. Yeah. So yeah, overall I still earn some profit from the trading. So yeah. So quite lucky. I would say it's just lucky.
Yeah. So for the time that you lost, just now you say when you do trading, does it go like in your plans with your plans, like it reach your stop loss and then you sell? Or
you mean the trading bot? Yeah, of course. You always need to sell at the stop loss point.
Yeah.
And okay, and then the last thing I learned, which is you have to skin in the game. You have to skin in the game and make yourself involved into the space to learn more. What do I mean? For example, if you want to learn crypto, just put little money in Bitcoin, just put little money in Ethereum. Yeah. And then the little money make you have the engagement, you have the involvement, and you automatically will learn more. So skin in the game. And then it kind of like you create an environment for yourself to learn more. And so it also you can invert the logic. When something need to be learned, put a little money or put a little effort. Yeah, so this is all the thing I want to mention. And yeah, so this is all the lessons and also some improvement, some of the reflections I want to mention for my annual investment review.
Yeah, there are so much things to learn, and you also have shared many advice and lessons to me.
Yeah, so do you have anything you want to add in?
Just one more little question. let's say if we invest in the index,
Mm-hmm.
then because index is like a combination of few of the big stock, right, in that industry.
Mm.
And so in that case, we kind of like have uh what what should we need to do? I mean, to like to see uh to do the research, because
You don't. Mm. Because what?
because I think in that case is only um yeah um yeah, I just have no idea uh what to do. Is it really like put in money and then nothing to do?
Yeah, really nothing to do, especially for US market. Because in the foreseeable future, US market is the strongest market, strongest stock market.
Mm.
And you investing in the US market, you kind of like investing in the US economy. You investing into the idea that all the best thing will just happen in US markets.
Mm.
Mm.
Yeah.
And of course, in the foreseeable future, I think this is correct. This is right. Look at the top. Look at the top 5 highest market cap company in the world. All of them are in the US. Look at the most advanced technology company in the world. They are in US markets.
Mm.
And everyone want to list it. I mean, every ambitious company, they want to list it. They want to go IPO. They want to go public in US markets. Mm.
Mm. Yeah.
Okay, and last question, want to ask you, why
Yeah.
no Bitcoin? Yeah, I'm not asking why no crypto. I'm not asking why no Ethereum. I'm not asking maybe why no Solana or why no some other altcoin. I specifically mentioned Bitcoin. Why no Bitcoin? Yeah. So from this question, you can see how much high conviction I have in Bitcoin. So yeah, the question is why no Bitcoin to you? Mm.
It again hit the concept of or the important thing you mentioned just now, which is the understanding.
Mm.
Yeah, the price uh, at the current moment it goes up and down so much, and
Mm.
I believe if I go in, I definitely will be affected emotionally, and
What? Yeah.
because I have no understanding. So,
Yeah. I
when
mean, what if you put 1% of the portfolio into
yeah,
the Bitcoin? Will it
yeah,
still affect your emotion? It's
no,
just, mm,
mm,
it's just an excuse. We discuss so many position sizing, right? It's just an excuse.
yeah,
Mm.
like you say, to involve yourself in the game, right? If I invest like a
Mm.
little money, and I will,
Start learning, learn
yeah,
more.
yeah, have
Mm.
the intention to learn.
Mm. And yeah, when we start when the time we start the conversation is also around March 2020 or April 2020, and I start telling you I'm bullish to crypto market already, right? So almost 2 years passed already, right?
Yeah.
Mm. Yeah, but of course, we can we cannot predict what is the future of the crypto market, whether it will have a total wipe out, the whole crypto market just go disappear. There's a possibility here. Everyone have their own. Everyone uh have their own percentage in their mind. I also have the percentage in my mind. Mm, yeah, But for me, I'm willing to take the risk. And yeah, one last thing I want to add in. I think it's also one thing. This is should be learned in investment, which is called the Sharpe ratio. It's one of the perspective to look at the risk-adjusted return. Of course, it doesn't mean that you just need this indicator and then you can make a good investment. No. Understanding is still the most important thing. And what Sharpe ratio means is the returns, the annual average returns or the annual. You can pick. Maybe you want to choose the average returns. Maybe you want to use the as of today returns, or maybe you want to pick the highest potential returns, and then you divide in percentage terms, divided by the highest or the average. Yeah, the volatility. So, for example, for SP 500, if I pick the periods when I started to do investment, which is the May 2020, and as of today, this is like 50% returns. So this is 50% return divided by the biggest volatility. So the biggest volatility you can see is kind of like the price at the all-time high in this period, and then drop enough low, drop enough deep, and then it created volatility. And then the biggest volatility in this recent month, which is dropped from the 4,008 to around 4,200, and this is around 12.5% volatility. And then you use 50% divided by 12.5%, you get a Sharpe ratio, which is 4. Yeah, 4 is really, really high. And most of the T-code, the Sharpe ratio is just less than 1. It's just less than 1. Yeah, but of course, because in these 2 years, this is the best performing period. You can say in the US stock market history, yeah, this 2 years is really, really best performing. But maybe it's not the best performing, but it's definitely is one of the most performing periods. Yeah, and it's not sustainable. And if you pick the highest point, which is at 4,008, and then the returns is 60% divided by the volatility 12.5%, you get the 4.8 Sharpe ratio. Even higher, of course, because you pick the high, you pick the all-time high price, you pick the all-time high returns. And you can also look at the Nasdaq. You can calculate. I think Nasdaq, the Sharpe ratio should be higher. And if you look at the Bitcoin, started from May 2020, I tried to pick the highest price at this period, and it's around 9,000. Start from 9,000, and if I pick the current price around 4,200, sorry, 42,000, and this is around 367% gain from 9,000 to 42,000. And the maximum volatility is around 55%. So you divide it, you get a Sharpe ratio 6.67%. It's even higher than the SP 500, even though the volatility is higher. But the returns is able to compensate you for the risk. So this is what the Sharpe ratio means, risk-adjusted returns. And if you look at the all-time high, use a 69,000 minus 9,000 divided by 9,000. You calculate the returns, and you get 667%. and then you divide it by 55% volatility, you get 12.13 Sharpe ratio. It's around three times of the SP500, or 2.5 or 2.6 times of SP500. This is just amazing. So what does it mean? It means, for example, I can all in SP500. Okay, let's say I compare them, and then I use the Sharpe ratio as of today, which for Bitcoin is 6.67, for SP500 is 4. And if I all in the SP500, maximum volatility I need to suffer is 12.5%. For some people it's low, for some people it's high. Okay. And I can get 50% returns. Right? But what if I invest in Bitcoin? As of today, my returns is 367%. Right? If I use 367% divided by the SP500 index returns 50%, right? I get the 7 times, right? Yeah. So what does it mean? My portfolio is 100%. I use the 100 divided by 7.37. Yeah, are you with me with the figure? Yeah, 100 divided by 7.37%. What does it mean? I just need to use 13.62 or 13.63% of my portfolio to invest in Bitcoin. I can get 50% returns. Does it make sense?
Yeah.
Yeah. Yeah. So when I invest in 13.62% of my portfolio, and as of today, I can get 50% of the returns. And what's the risk I will suffer? And the remaining on my portfolio, I hold as cash, or I put in the fixed deposit to earn maybe 2% or 3% interest rate. What's my risk? What's the maximum volatility? What's the maximum drawdown I will experience? Can you do the calculation for me?
I'm sorry. Can you repeat the previous sentence?
I mean, I put 13.62% of my portfolio into Bitcoin, and the remaining
in the fixed deposit or cash, right?
Fixed deposit of cash. We assume 0 interest rate.
Yep.
Yeah. And what's the maximum volatility, or what's the maximum drawdown? Drawdown means the maximum drop from the highest point to the lowest point I need to suffer.
Yep. It's just the percent that you export to just now is 13%.
Yeah, 13.62% minus the maximum volatility of Bitcoin, 55%, right? So it's only 7.5%. Yeah.
Yep.
So that means if you use this kind of portfolio, you only invest 13.62% in Bitcoin. You can achieve 50% returns by only taking 7.5% of the maximum volatility. But at the same period, SP500, you want to achieve the same returns, you need to suffer 12.5% volatility. Which one is better?
Yeah. The lower better.
And if I use another calculation, if I'm willing to suffer 12.5% volatility, how much I can allocate in Bitcoin, and also how much additional return I can earn from Bitcoin with the same volatility level? Must be higher, right?
Yeah.
Now, so you can see it's kind of like Bitcoin. It seems like very, very not safety. But if you do the Sharpe ratio, if you do the portfolio management, if you do the position sizing right, it seems like Bitcoin is a safe as asset. Yeah, it's a quite counterintuitive. But of course, this Sharpe ratio is using the past data to do the calculation. And this past data is not applicable. It's not applicable for future returns. It's not applicable for future volatility. But one thing you can assume is maybe the Sharpe ratio maintained. As Bitcoin price goes up, the volatility goes down and the returns go down. So the Sharpe ratio maintained or the Sharpe ratio go down. You have your own judgment. You can do some calculation based on understanding, based on the subjectivity, and you allocate some of the portfolio. This is something you can do instead of fully relying on the past history. So it still can give you some insight how Bitcoin work in the portfolio. Yeah, but if you want to really invest in crypto with material amount of money, you need to do a lot of research. If you just allocate maybe 1 to 5% into Bitcoin, that means 1 to 5% of the portfolio in your Bitcoin is just nothing. Yeah, in any single days in a year, your portfolio can experience 5% drawdown, right? Very common, right? If you cannot experience 1% of volatility, or you cannot experience like 5% volatility, you just don't do investment. It's better. Yeah. And what does mean 1% to 5% volatility from Bitcoin when you allocate only 1 to 5% into Bitcoin? What does it mean? It means Bitcoin go to zero, right? If Bitcoin cut half, you allocate 1%, your portfolio just affect your portfolio 0.5%. 0.5%. Yeah, what is it? Nothing. And if you allocate 5% into Bitcoin, 50% cut, your portfolio just affect 2.5%. For some people, it is something. Yeah, but for me, it's nothing. And for you, it seems like nothing also compared to your portfolio loss. Yeah. And I have very high commission in Bitcoin compared to Ethereum, but I would say that Ethereum even have a greater Sharpe ratio. Yeah, for the all-time high is, if you're using all-time high, is 38.65. It's more than 3 times of Bitcoin. It's almost 8 times of the SP500. If I'm using the prices of today, it's 22.69. It's around 3.5 times of the Bitcoin, is around 5.2 or 5.3 times of the SP500. So the Ethereum must perform very, very well. And yes, yeah, it performed really well in these 2 years. Do I think it's sustainable? No. I think the price action will just, the returns will just become smaller, but the risk, the volatility will also just become smaller. In the past, Bitcoin can fall 90%, Ethereum can fall Bitcoin can fall 80%, Ethereum can fall 90%. But in this recent 2 years, Bitcoin only dropped 55%, Ethereum only dropped 59.5% at the maximum level. So these two assets become more mature. Yeah. But even though I still can't get my head around to fully invest in Ethereum, I can get my head around to fully invest in Bitcoin. I have a very, very high commission in Bitcoin. but I do aware that there are some uncertainty and I should do some diversification in the most promising in the most promising industry to me, which is the crypto, which is the blockchain. And what's the best bet I can make? Bitcoin and Ethereum. So I don't do. Yeah, I just keep dollar cost averaging. I don't readjust them, even though I still couldn't figure out what's the point to fully invest in Ethereum. I can see the value, but I just can't see the returns in terms of the risk. The risk is also very, very high. For me, the risk of Bitcoin fail, go to zero is much, much, much lower than Ethereum. So when I talk about crypto, I always talk about Bitcoin. I seldom talk about Ethereum, even though I also bullish in Ethereum. But if you want me to recommend people to invest in crypto, I would only just I will give two kind of advice. Of course, I don't give advice. I don't want to give advice, but if I want to, one type of advice, invest in Bitcoin. Another type of advice is invest maybe 70% in Bitcoin, 30% in Ethereum, or you allocate yourself. Yeah, maybe 50-50, or maybe 70-30, or maybe 80-20. Yeah. Yeah, so I think this all thing I want to mention for today's topic.
Yeah. Yeah. Also me too.
Yeah. So talk to you tomorrow.
Yep. Talk to you tomorrow, Eric. Goodbye.
Goodbye.